Yo, what is up? Trey, it is Gorilla Gang in the house. How we doing? Holy Toledo. I appreciate you guys being patient with me the last couple of days. I know I haven't put out a video, but I just wasn't in my apartment. I was out having some fun. Let me tell you, the time that I was gone, I could tell Titan missed me because when I got back, he wanted to play like you would not believe. Oh my God, my arm is demolished. He freaking digs in, man. Oh my gosh. But nonetheless, we got to get you guys ready for the upcoming week. We're going to go over a couple different points here. But before we do, what is up, everybody? I'm going to Trey's Trades. We freaking talk fast and don't skip class like the premise by saying I'm going to find advisor or expert. So take away to say the grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to be going over ticker symbol AMC here. We're going to go over a couple different things. There's actually some really interesting data in terms of the short interest going up, but the utilization going down. I want to dive into that a little bit. And what I think that could potentially be, we're going to go over the options flow using a tool called Unusual Whales, which is something that I use just to watch how much put and how much call option activity is going into this specific stock, and then finish it off with a technical analysis and what I could see happening here over the next upcoming days, because I did have a prediction, I did have a trend sort of playing out here, and I want to update you guys on that trend so we can continue on with our way and just kind of give you an idea of what I'm expecting here over the next 1 to 2 weeks or so. So without further ado, let's get into the video. So the most important thing in terms of short interest is probably this huge parabolic, stupid freaking old man Jenkins jump up to 18.93% current short interest of free flow. Now, this is a tool called Ortex that I personally use just to track 85% of the exchange reported FINRA data. And what you see here is that based off of 85%, which is a conservative estimate of the overall short interest in the stock, you've got 96.83 million shares currently shorted into AMC itself. Now, the reason I say that's conservative, and I always repeat this stuff on a day-to-day basis on my videos, but I always assume that there's somebody new watching this overall update video who might get into AMC. The reason I say it's conservative is because it doesn't take into consideration a couple of different things. It doesn't take into consideration the failures it delivers, the naked short selling that would get taken place, the high-frequency algorithmic trading that kind of pinches pennies back and forth between the stock, or put options, long puts in this overall stock, because the derivatives market has a lot of heavy activity. And the reason that's important is because it causes volatility to the up and downside, which actually does affect the price action. And when there is heavy put activity and those run in the money, meaning that they were previously out the money, they run in the money, they get hedged for, causes selling pressure, that can be considered short interest. But nonetheless, based off of all that, 18.93% is a high number. Don't let any freaking stupid, silly chicken out there on mainstream media, Charles Gasparino or the like, tell you that the shorts have covered, that this is a dead cat play, because it is definitely not a dead cat play. Dead cats don't, dead cats would take their profits and walk away, but instead they're just doubling down. So take that for what it is. You also have the short interest not quite aligning with the utilization, which actually went down. Now, I want to show you this here really quick. So the utilization previously was sitting at about 92.82%, but as you can see, it's at 90.91%. Now, this is also interesting because if you were to pull up the actual shares on loan, what actually ended up happening is that number increased. So what does that actually mean, right? If the utilization went down, shares on loan went up considerably, which is 117 million, and the short interest also went up considerably. That likely means that there are more institutions out there that could be lending stock out in order to establish a short position. Now, why is that important, right? Because I think about a couple of big institutions that are in this game here. We know that BlackRock and Vanguard have pretty decent stakes in this company. Now, what can actually end up happening is if a company is long on a stock, they can lend out that stock to different institutions, big firms, to either A, just have as a share on loan, or B, to short into the market. So it is possible that you've got some big institutions out there that are lending out additional stock. So the best way to put this that I simply can is the short interest went up, the shares on loan went up, but the utilization going down means that the fraction has just changed, right? You've got a bigger bottom number, even though the top number has also increased. That just means that the bottom number of that overall fraction increased more than that top number did. So because of that, you're going to have the cost to borrow kind of do this still, right? It's going this back and forth. And the reason that cost to borrow is important is because that does cause pressure on short positions as it does begin to increase. But nonetheless, you do have confirmation that there is increased pressure starting to happen here. And that's verified by the cost to borrow as well as days to cover. Now, I want to show you the 3-month days to cover, which is down here as this light blue trend line saying about 0.81. Anything over 1 I would consider statistically significant. So essentially what this is it's a short interest divided by the 3-month average volume. And anytime that number starts to go up, it becomes increasingly difficult for a short position to get out of a short position profitably, right? So that's a pretty good thing to see. And on top of that, I'm going to show you this more as we get into the charts, but the on loan average day is currently sitting at 53.44 days. Now I mapped this out pretty much to a T, and I'm going to show you this on the daily candles. What that means is the average cost of any sort of short position, the average, right? This doesn't mean every single short position, just means the average loan that's established into this stock is somewhere between this candle of $51 and $58. Now this is interesting because we're coming very close to the divergence point of profitability for some of these shorts who have been holding in the green for a while. Now, what just blows my mind to no end is that some of these new shorts who got into AMC stock are making the exact same mistake that the old shorts have made, right? When they got fucking pushed up to that $72, $77 range, and some of them probably inevitably got margin called or liquidated, at least to some extent, right? They're making the same mistake over again, which just kind of backs my theory that I've had with AMC since back in March, that you're going to see the stock squeeze a lot like Tesla, meaning that it's going to go through cycles of periods of nice bullish activity and then periods of bearish activity where this stock pulls back, because ultimately we've seen that trend has played out pretty much to a T for a very long period of time. Huge bull phase, bear phase, consolidation phase, bull phase, bear phase, consolidation phase, bull phase is the next upcoming swing. We've seen this happen a couple different times now, and it's kind of backed by the data. You can see it happening with the data, right? You can see the on loan average days goes through this phase of huge rips, down swings, consolidation, huge rips, down swings, consolidation, and the short interest does the same exact thing. Huge rips, down phase consolidation, huge rip, down phase consolidation, huge rip. I mean, it's just not rocket science. You can see this right in front of your very eyes. And we're in that nice, fun part of the next upcoming bull phase. So what do we have rocking here with the options flow? As I briefly mentioned here before, I use unusual whales essentially as a tool to see what sort of derivatives activity is happening, because this can actually come and predict upcoming moves for the stock. Now, I don't ever bullshit people, right? I'm just giving you information straight as I see it. And what you see here is that on September 1st, you had two pretty decent put-sized activities that took place here. Now I'm going to show you the filters that I use. I think this is probably pretty important. $200,000 is the premium minimum that I like to see in terms of large incoming buy orders for the call or put options market. And both of these were decent sized orders. $1 million worth here, $412,000 worth here. So that I would imagine means that there's some pretty big buyers out there anticipating that there's going to be a short-term move to the downside. Not necessarily a large one, right? You don't need a big move with $1 million premium, but nonetheless, I would imagine that could mean in the very short term, you see some sort of push, maybe immediately at open, maybe it means a slight flush at open on Tuesday, right? But that's something to watch for. Well, all in all, if you look at the overall charts here, it's kind of washed. You've got a slight favor to the call side of things in terms of the derivatives activity, but it's not by a lot, right? It's not a huge statistical difference between that. I've seen much more bullish looking call options flows in terms of different tickers in the market, but it is favoring bulls just slightly. 52.2% premium here for the bulls versus bears. You've got the ask side far more than the ask, about 55% or so. Volume, more bulls than bears, right? So all in all, it is bullish, but I'd say not quite as many people are buying in the very short term as there were previously. Now, I want to get into the TA because this is probably the most important thing to me. What actually ended up happening here, right? So if this is your first time watching my videos, I have essentially just been mapping out what I think is going to happen here day by day for a little while, and it tracked pretty decently well, right? You can see all these different lines that I've got drawn up, and this is what I thought would actually happen. Didn't delete those off the chart, right? This is the trend line I thought I would follow. This is the pattern that I thought I would follow. And it hasn't quite gotten this last phase right here yet. Now, in my last video, I said I thought you'd see 1 day of consolidation on Thursday, which did end up coming to fruition. And I thought Friday you'd get more of a little bit of a push back up to that $48 range. But that didn't happen. This is actually the first period of price action that I was a little bit surprised by. And that's not necessarily a bad thing. It's just something that I was surprised by. I didn't think you'd see that low of volume on a Friday. Does that change the overall picture though, right? If you've watched my videos for a while, you know that I'll tell you if I think it's going to go down in the short term or up in the short term. I don't think it does. I think you're still sitting in very similar situations as you were previously, but I do think what you see here right now is a portion of supply and demand zones. Now, I've made a video about this. If you want to watch that, feel free to do so. But I think where this stock is sitting right now is in a demand zone, meaning that I think you can get a push to the upside since it has entered and remained in this overall level that it is currently sitting in right now. And if it is going to drop down, right, which could, I can't guarantee you anything. I think it's going to pop down to about right here. Right here at this level of support at about $40.25. Is that going to happen though? I think it's much, much less likely than seeing a push to the upside, and I do stand by that, right? I am very short-term bullish and long-term bullish, obviously, but in the short term, I think the next 1 or 2 weeks of price action is going to be something you guys are going to like to see. So I think you're going to get a bounce out of this. I think you're going to bounce out of this demand zone back to that fourth test of that $48.50 level. We've already gotten 3, right? 1, 2, 3 different tests of that $48.50 level, and that 4th test trend that has played out many times with AMC stock, I do think is going to come to fruition. Now, I'm not going to delete this trend line right here because I want to show you guys and be transparent and say, hey, that's the last piece of the equation that hasn't come to fruition yet. But I do think this is what you're waiting on. I really do. I think you got 2 beautiful days of consolidation. You got 2 beautiful rejections right off of this this demand zone, pretty much to a T, right? It's tried popping down underneath that twice and both times rejected, which is a good thing to see. Both of these zones derive from back here, this price action. It's essentially just choppy price action before a big volatile move, either the up or the downside. And that choppy price action would be right here before this large move to the downside. And that's where this really derived from, right? That's where I'm catching this. And you can see it's being respected very well. I mean, 1 rejection, 2 rejections, 3 rejections. It's a demand zone. It means that buying pressure typically ensues when you get a push into that level. And I think once it gets out of that level, you're going to start seeing that volatility push back to the upside to get that 4th test and ultimately break over the $48.50 level. And that's what I'm watching for. So, guys, this is simple. Don't go into any single day expecting the squeeze to just boom, it's there, right? There's predictable things that can happen. And what you need to know ultimately is we're on the right track, right? Don't bank on any given day. Don't play stupid, ridiculous out the money call options on any given weekly expiration calls. Have patience. The stock is trending in the right direction. It's setting higher highs. It's setting higher lows. It's going in the direction that the apes want this thing to freaking go. All you got to do is wait it out, my friends. All you got to do is wait this bad boy out. And that's what I've got for this video. So blah, blah, blah. I know people drop the like, friends. Catch you on the next one. Light taps always. Much love and peace.